In the payment space, really the card is the physical manifestation of the product. And we've gone out and signed up hundreds of different licensors and have thousands of different images that you can put on your card. And so the tagline that we use is pay with personality. So you can find something on our site that appeals to you personally. So when you're bringing that card out, it's saying something about you and your interests. And a lot of times it initiates conversations with people and allows you to have a little bit more of a tie-in to the product than just a standard card that you might get from a traditional bank.
Welcome to the Tearsheet podcast. I'm Zack Miller. There are a handful of firms gunning to become leaders in the challenger bank space. There are the usual suspects like Revolut and N26, but there are other firms that are growing their user bases and assets too. One of those companies is Card. It has 600,000 accounts and $3 billion in customer deposits to date. With some new growth initiatives, Card is on track to surpass 1.5 million new accounts in 2019. Card's kind of an unbank bank, meaning the product focuses on branded debit cards, including logos from popular sports teams, athletes, and music groups. Card CEO Tim Coltrell joins us to talk about how he's doubling his account base year over year and what he's doing to evolve into a competitive challenger bank brand. We discuss Card's product pipeline and how the company acquires new customers. Tim Coltrell is my guest today on the Tearsheet podcast. Before we continue with our program, I'd like to thank our sponsor, MX, for supporting Tearsheet's work. MX is the leading data platform for banks, credit unions, and fintechs, enabling its clients and partners to easily collect, enhance, analyze, present, and act on financial data.
Yeah, good morning, Zack. My name is Tim Coltrell, and I am the chairman and CEO at Card.com. I've been with Card for about 3 years now, and my background's been in the payments industry for my entire career, and I'm really excited about the prospects for Card.
So I'm kind of here. I'm interested personally to hear more about your background. Can you tell us a little bit about the steps that led you to Card?
Yeah, sure. After graduate school, I ended up working for one of the major banks in the credit card industry. And the beginning of my career was working for a variety of different large bank institutions. And I always felt like, financial services was one of the great parts of the industry that was sort of overlooked by a lot of folks. And when the opportunity came my way to be part of a startup company in the financial services area, I jumped on that and have been in startups since then.
And what do you like about startups, I guess, as opposed to some of the larger organizations? What is it particularly suited to you, your background, and your interest?
Yeah, what's really exciting about working in the startup environment is the ability to create something new and different and bring it to market quickly and see consumers respond to it and really sort of get out of the mold of the large banking institutions of how they approach the market, really do creative things like we've done at Card with the imagery we put on the plastic.
So let's start with Card. For our audience who's not familiar with it, can you describe the business today and sort of the evolution over the past few years and catch us up to date?
Sure. Yeah. So Card was founded with the idea of bringing mobile banking to consumers and adding a feature that stands out in the marketplace with a branded affinity on the card. So if you go to Card.com, you'll see thousands of different images that you can have on your card. In the payment space, really the card is the physical manifestation of the product. And we've gone out and signed up hundreds of different licensors and have thousands of different images that you can put on your card. And so the tagline that we use is pay with personality. So you can find something on our site that appeals to you personally. So when you're bringing that card out, it's saying something about you and your interests. And a lot of times it initiates conversations with people and allows you to have a little bit more of a tie-in to the product than just a standard card that you might get from a traditional bank.
91% of mobile banking users prefer using their app over going to a physical bank branch. But it's no longer enough just to offer an app. Customers demand a really good experience. That's where MX comes in. Its new mobile app, Helios, helps banks and credit unions stand out in today's world of mobile banking, going beyond simple transactions and account management. Does your mobile app get thousands of 5-star reviews? Does it increase your engagement and lead to higher brand loyalty and ROI? Check out Helios by MX at MX, that's the letters M and X.com. So given that model, how big is the user base? What are the assets that you guys that are kind of in the system?
Yeah, so since we started, we've had more than $3 billion in deposits come to our accounts. And a lot of that growth has been in the last couple of years since I joined. We really have started ramping up marketing in the last couple of years and have plans to expand it substantially from here. And beyond just growing the core product that we have today, which is a mobile first bank account, we have our ideas and products in development to expand the product offering set and leverage the portfolio of affinities that we have to provide more product to consumers. And my goal is to be able to have a product that we can give to every consumer that comes to our site, from gift card to prepaid to bank accounts to credit cards.
So before I have some more questions about product, but before we get there, I'm curious. So the model is you in-license branded content onto the cards. Do the affinity partners help in terms of marketing and bringing new in customer acquisition as well?
They do. We work with them to get the acquisition funnel to include their customer bases. So a lot of these affinities have their own followings, and we work with them to present our product to that group of people as well. And then in addition to that, we do our own marketing with various affinities, and we use a variety of different channels to reach to consumers. But the beauty of it is that each affinity kind of attracts a different demographic, and we can reach across the age spectrum with some of our nostalgic brands, as well as brands that appeal to millennials. So when we look at our portfolio, we can see performance that's different based on what affinity people select. So that's pretty exciting. It's an additional layer of data that we get about consumers that no one else has.
That is interesting. And you alluded to this growth happening, I guess, under your watch. Can you attribute it to specific activities that you've embarked on?
Yeah, I mean, number one is obviously being in a position to ramp marketing. We raised some capital in middle of 2017 that allowed us to really start to rebuild our marketing capability. And I think from the first month we marketed to now, we probably increased our monthly volume by 5. So we're generating over 150,000 new signups a month right now for our product.
Wow, those numbers are really impressive. What's interesting to me is as card position vis-a-vis some of the other challenger banks have a very strong brand. In a way, card is kind of the company behind other people's brands. Like, how do you reconcile sort of being that the player behind these affinity brands?
Yeah, that's a great question. Card itself hasn't done, the company, since I've been here, hasn't done a lot of outreach in the market to let people know about what we offer. And we're just starting to do that. So I think you'll see more brand awareness about Card itself. I mean, obviously, we have one of the best domains in the industry, and it represents what people see when they have a payment card in their pocket. And while we've been primarily marketing the brand of our partners first, we're doing more now to call out the features that we offer. Our features are on par or better than many of the products that are in the marketplace. And so I think that extra feature of the branded card is a good differentiator from the noise that you hear about, the types of features you hear in the challenger bank space.
And sorry, I didn't mean to cut you off, Tim.
I was just going to say, I think the way I think about it is, we've been brand first. So we have this great card and that catches people's attention, but they don't know enough about the features of the product itself, like early direct deposit and the ability to load cash and the ability to upload a check to your account. So, many of the features that, we in the industry sort of take for granted. I see a lot of our competitors just doing a great job at calling them out. And for consumers, they may not be aware that those features exist. So one of our core strategies now is to balance out the imagery on the card as a key feature, along with the other features of the product that let them do the transactional things that they need to do.
So the model really has been primarily B2B to C, I guess. You're reliant upon your affiliate partners to help market you. And now it sounds like you're actually going to be branding Card directly. Is there a channel conflict there, or how do you manage sort of um, the difference between going B2B to C and I guess going B2C?
I wouldn't say that we're more I'd say we've been all along more B2C. So
Okay.
it's been
Sorry if I
primarily
misspoke.
us doing the marketing to the consumer of the affinity, and with some additional volume coming from the brand partner. But the success that we've found is the ability to find the market that has interest in the particular affinity ourselves, and then be able to show that product to consumers when it's the right time. And some of the brands really lend themselves to that. For example, the NFL Players Association, we can target on Facebook around certain geographic areas with the players that would be popular in that area. So you're in Boston and you're scanning your Facebook timeline, and suddenly you see a Tom Brady ad right after he wins the Super Bowl. Those kinds of things are advantages that we have, and allow us to succeed in channels that other people that don't have that differentiator to use in that channel.
That's a great point. And that was a segue to my next question: was what channels do you use to acquire customers? And I have to imagine, given sort of the demographic and geographic targeting capabilities of Facebook has to be a pretty strong channel for you guys.
It is. It's been one of our lead channels for a while, but over the last year and a half, really, we've been expanding channels throughout the digital spectrum. So AdWords, SEO, the affiliate channels, really anywhere that you would expect a digital first marketing company to be. We're in those channels, and we have plans to expand beyond that. My background includes startups in a similar company in the past. And so there's channels that we know work for us and for other people that we're not in today. Direct mail is a good example, where if you target correctly, you'll find the right consumers that are interested in these products. And that's a channel that we'll be exploring in the next 6 months or so.
Well, I guess this is going back to a question I asked before. Is there a way to empower or to educate your affinity partners to have them sort of do that first touch for you guys in the marketing funnel?
Yeah, we're actually working. We have new resources dedicated to that in the last few months. So we're seeing a lot more progress there. As you can imagine, some of the affinity partners have a lot of different products that they represent, or where they have their affinities in the market. So we have to get their attention. And the way we do that is we have a sort of a launch plan with each one of them. So when we bring on a new affinity, we work with them and we ask them to do things like, post to all of their social media. Let's have a link on their homepage, wherever it is, whatever means they have for interacting with their consumers, so that they can see the product is available. And it's obviously a natural fit, right? If you're a Betty Boop fan and you're looking up Betty Boop, you're looking on a Betty Boop page, why not see the Betty Boop card product and have a link to be able to sign up for it right then?
That makes total Betty Boop sense. Early in the conversation, you alluded to some innovations in the product. What can you share with us in terms of like where your thinking is, where you're headed with the product? Okay.
One of the things that I saw as an opportunity when I came to Card was the opportunity to offer more products with the same imagery that we have. So in our product pipeline, we have gift cards, a full DDA account, including a savings feature, and a short-term overdraft feature that's optional for the consumer. And then beyond that, we're also planning on credit cards in the next 9 months or so. And the idea is that as a consumer comes to our site and they find the image that they love on a card, we'll also have the product that fits their financial stage of their life.
Interesting. And what we also see, sorry to stutter, but when we're talking to a lot of the challenger banks, is like there seems to be sort of a convergence of functionality, right? So like when one challenger bank comes out with a function, everyone else sees them. Well, that actually makes a lot of sense. Let's build that into our feature set. I guess how do you think about sort of maintaining leadership or differentiation as you go forward? Can you rely just on sort of those affinity and the brands itself that are on the cards?
It's a great question, and I thought a lot about this morning because I anticipated you asking this question. If you really think about it, the innovation that's coming from the new players in the space is primarily around presentation of the product to the consumer,
True.
and there's another point I was going to make. It's innovation around the way the product is presented and more aggressiveness around the pricing. It's really only those two things that are changing. The features underlying the products are available in the big banks as well. So it's more about, keeping up with the feature parity with other folks, and then having something that differentiates you in the marketplace. And for us, the affinity is the thing that does that for us. And then having a great acquisition process to present your product to the consumer. And the reason that those two things, just presentation of the product and lower pricing, are enough in our industry, is that it's such a big industry. Banking, I think the debit volume for I think it was a year ago, was something like either 2 trillion or 3 trillion. I can't remember what the number was I saw in the report I looked at, but that's a big number. And for companies like us and others in the space, we only have to capture a small percentage of that market share to have a very successful company. That's why I think in this transition to and opening up of neobanks that are making headway and gaining traction, it's going to be a long path to acquiring a substantial portion of the marketplace. And so I still view us as being at the very early stages of that transition to alternative banks than from the traditional banks.
Yeah, that makes total sense. And I guess in the remaining time that we have, you alluded to sort of what you had in the pipeline already. I'm kind of curious, as the CEO and as a leader, like, what are you focused on going into the second half of 2019? What are sort of your big audacious goals that you'd like to share with us?
Yeah, I mean, the biggest goal is continuing to grow the business. We've done remarkably well in the last couple of years, and we have to continue to expand our marketing capability and getting our product in front of more people. And that includes enhancements to the way we market. It includes getting new products out into the market that allow us to meet the needs of consumers that don't necessarily need the product we have today. And then I think the third thing is just optimizing the channels that we're in, getting more touch points with consumers. So some of that is, going into more traditional media or traditional marketing channels. Direct mail is one example. Television is another example. And I'm really excited about that because our product does really well because of the visual nature of it. When people see our products, and if you go to our website, I guarantee you that you will find an image that you would love.
It's such an interesting point because, like, when you think of financial services and the challenge of marketing financial services, it's always because you can't touch them or hold them. They don't feel good per se, but like, you guys actually have a way around that and it's a very elegant yet simple solution.
What was that?
Sorry, did you drop off? I don't know if
For a
it's
second, but I have you back now.
Yeah. So I was just going to end with the point of saying, like, one of the challenges of marketing financial services is that they're invisible to the end user. They're not cozy. You can't touch them. And the visual presentation of your products is an elegant yet simple way around that.
Exactly. And that's what I'm really excited about. When people hear card.com, one, it's very easy to remember. Two, they're going to see images, at least one of those images going to appeal to them. And we're not just having to try to sell features. We have all the features and we'll make sure we point those out. But that visual component where they say, gosh, that's a really cool card. I've had that happen to me many times when I'm out using my card in the wild. I think I was in Miami, and I had a Jimi Hendrix card, and the clerk held the card up away from his head and said, now that is a cool card. And that's the feeling that we want people to have when they see an ad from card.com.
One last question. Feel free not to answer it. How many card.com cards do you carry?
I have 5. and I think 3 of them are NFL players. Then I have Jimi Hendrix. And then I have one that is not a branded product. It's a beautiful image of polar bears in the ocean. So, there's not only the branded products we have thousands of other images that appeal to people and their particular interests. And I think that's kind of the key to the whole thing is like getting product out there that have imagery on it that people have an affinity for, and making them desire to have that as a card that they carry in their wallet.
Tim, thanks for joining us on the Tearsheet podcast today.
You're very welcome. Thanks for the time.